Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menasce. This is the weekend edition where we interview notable people from the world of real estate investing. Today is no exception. We have a great guest all the way from beautiful, sunny Ambergris Caye, Belize. I'm here with Robert Helms. Welcome to the show.
Hey, Victor. Great to be back on the program.
Well, great to have you here, Robert. We've just spent an amazing week together at the 20th Annual Investor Summit. Some of the biggest brains on the planet, strategizing, learning, just learned so much. There's some storm clouds in the weather forecast for today, but there's some storm clouds in the economy. What are some of the biggest takeaways for you?
Well, I think big picture is change, more change than we're probably used to seeing, and we're looking ahead to that stuff. Clearly, inflation we've been dealing with. Now interest rates are up, supply chain, all the things are coming together to create an interesting time. It's not all bad. It's not all doom and gloom. But this week, Dr. Chris Martenson and George Gammon, Danielle DiMartino Booth, Russ Gray. I mean, we had just an incredible amount of data. But I think the biggest thing is we have to be ready for whatever comes, because we can't control the change. We can control what we do in the change. And of course, real estate weathers almost any storm. Over time, real estate is going to perform. Time heals all wounds. It's for folks that get caught on the turn or unexpectedly and don't pivot, there's going to be challenges.
That's exactly right. If I think back to 2008, the period post-2008, certainly millions of people were caught in that downturn and didn't survive it. And yet there were far more who did survive it. And so it's easy to get caught up in the doom and gloom and say, well, this is happening, you sit on your hands, you got to freeze up almost. And I don't share that perspective. How do you manage the contradiction of, boy, this is looking very uncertain, and investing with confidence for the future in today's environment? I'm not talking about a year from now, but even today.
That's a world-class question, and I think it's one of the things we all face. Is we heard several of our very competent, very brilliant faculty this week have a different opinion, right? I mean, there were some themes, and obviously last year we had Dr. Doug Duncan, the chief economist for Fannie Mae, talk about inflation not being transitory like they were talking about. In hindsight, that's turned out to be true. During this week, it was the FOMC meeting, and we had Danielle DiMartino Booth, who spent 9 years inside the Federal Reserve, interpreting that for us, and it wasn't necessarily great news. But that's a short-term thing. If interest rates are more expensive, fewer people can buy houses, more need to rent. So is that good or bad for landlords? If we're going to have inflation, that means the price of everything, including rents and apartment buildings, is up. So you can't be scared about what you hear. What you have to do is listen to every input and then make your decision about what action are you going to take that's going to benefit from what we're likely to see happen.
Investors have a mindset of looking for the sponsor of a project, the leader of a project, to deliver a forecast of what they think a project's going to do, sometimes with 3 and 4 decimal points of precision, which if anyone attempts to do that today, they wouldn't be truthful. It would be very difficult to say anything more than we think we're going to be okay over a period of time. But to say in 24 months your rate of return is going to be X dollars or X percent with any degree of confidence, it's just not there.
It's not, and that's okay. I mean, we have to change our expectations. There are times when we can make 10, 20, 30% cash-on-cash return, and there's times where we just got to stay in the game. If your cash is going down 8% every year, then being in a real asset that treads water is much better than that. It's always compared to what? And I think, Victor, what happens is people start to hear about the negative storm clouds and they freeze and they don't do anything. And that's not the answer either. You need to think through long term. Like here, we get downpour that lasts for 10 minutes and everyone runs out of the rain and then they get right back in. That's what we have to look at now. Every now and then a storm comes and it hammers down for day after day after day. So I think as far as projects go, you got to stress test. You got to do the worst case scenario, best case scenario, and then likelihood of each. Too many people look at just the negative. It could go bad, therefore I won't do anything. As opposed to, if it's going to go bad, where's their opportunity?
Yeah, exactly right. And we've certainly seen over the last several months a flight from the stock market that usually translates into a flight to safety. people often seek safety in the bond market. Well, there's no safety to be found there. So people are exiting the bond market. Where do you go from there?
Well, here's where the safety, your community, your tribe, who you're hanging out with, right? This is a great week for us to be able to spend time with investors in different markets, different product types, sophisticated, interested, getting educated, sharpening their brain against other brains. You have to have that backstop. I mean, just the fact that we had, Dr. Chris Martenson here, he's got a perspective that's long-term that wow, Ken McElroy, last time we saw a downturn, Kenny and his partner bought $300 million of real estate in 2 years, while everybody else was running for the door. So you learn contrarian thinking, but you also learn that in the light of day, it's going to be okay. If you think real estate will be worth more 20 years from now than it is right now, then your job between now and then isn't to try to time the peaks and valleys. It's to own more real estate.
Exactly right. And you've been at this a long time. The Investor Summit in its 20th year, the Real Estate Guys radio show now in its 25th, 26th year. That's a test of longevity. You don't survive that simply by aiming to time the market. You've got to be committed and be here for the long term. Talk about that.
Well, it's a good point. It is a marathon. It's not a sprint. And every now and then we get an opportunity to go do something around. I've been talking all week, so my voice is almost gone, but I've also been listening as much as I can because everybody has a perspective. Some of the best ideas we got didn't come from the stage. They came from a cocktail conversation or at dinner. Once people are chewing on this stuff and saying, well, what about this? And, we had a panel where you and a lot of folks came up representing different, we'll call them asset classes within real estate. You with development. We had people talking about short-term rentals. We had assisted living. What about apartments? What about commercial? What about retail? And each one of these folks shared their SWOT analysis, really about opportunities and threats given what we've heard. And in every case, there's opportunities. There's threats, for sure, but you can't just focus on that. Within the opportunity, and I think the big thing is that when you start getting around people that are doers, instead of gloomers, you just get that propensity to action, and you don't want to be crazy about it, but you definitely want to take methodical, diligent action because that is what wins in the long run.
I love it. Well, Robert, wonderful spending the week together. It felt like old home week with so many friends. And for the listeners at home, you definitely want to check out the Real Estate Guys radio show at realestateguysradio.com or on virtually any podcast platform out there, including terrestrial radio in certain markets. So in the meantime, have an awesome rest of your weekend. Go make some great things happen, and we'll talk to you again tomorrow.